Hey guys, what's going on? Wanted to first shout out and appreciate all of you guys for coming on the webinar today. Hopefully you guys had first off, hopefully you enjoyed it, but also I hope you got a lot out of it. As promised, anytime there's important information that comes out, we are going to deliver that to you in an efficient manner. And this is the first one of that, unbelievably. But right after the webinar, actually at 5 o'clock Central Time, we saw this come out on the Treasury Department website. It actually didn't come in an email or anything. We have people watching the websites, making sure that there's no additional information out. And they actually put some additional information out, which is the interim final rule by the SBA. And so this is the actual document. I think we're going to try and attach this to this email. So hopefully this gets attached to the email. But I went through and highlighted some key items, things that we talked about today in the webinar, some clarifications that may have changed since the webinar. So super important information. So stay tuned. It's going to be short. It's going to be sweet, and we're going to get through it. So bear with me over the next 5 or so minutes to update you on what I know at this very second. All right. So applicability date. There was some rumors out that this was going to get extended to September 30th, but it's not. It is officially June 30th, 2020, and I highlighted this and underlined it, until funds made available for this purpose are exhausted. So again, I want to stress to you, it is important to get your application in as soon as possible, because once the money runs out, it runs out. There is no guarantee, although there are rumors, but there's no guarantee that money becomes available. So I would recommend you go and apply now with the correct information. So let's keep scrolling down here. We went through and highlighted this with what we felt was the most important thing to discuss. So let's see here. Okay, so this part of the document tells you exactly what the SBA's lending criteria is going to be, and who is basically on the hook. So I want to read this for you. SBA will allow lenders to rely on certifications by the borrower, you, in order to determine the eligibility of the borrower and use of loan proceeds, and to rely on specified documents provided by the borrower to determine qualifying loan amount and eligibility for loan forgiveness. So basically, the lenders are going to rely on you to certify the documentation that you're giving them, and that they can loan off of your certifications. And so it further says lenders must comply with the applicable lender obligations set forth in this interim final rule, which is below. I'll talk to you about that in just a second, but will be held harmless for borrowers, my apologies, failure to comply with program criteria. Remedies for the borrower violations or fraud are separately addressed in this interim final rule, which we'll discuss in a second. So basically what this is doing is taking the lenders off the hook for lending to you. They have specified documents that they have to request. That's a little bit lower. I'm going to show you that. And they can push as much information through. It's on you to certify. And if they find out that you did not give the right information, or you intentionally created fraud or enacted fraud, then they will go after you. They are not going to go after the borrower. So keep that in mind. Let's keep rolling down. And by the way, the reason why that's so important is because hopefully that is going to push lenders to get the money out quickly, to run through these applications as fast as possible, as you, as the borrower, are certifying that all this information is correct. This section of the document discusses what you are required by SBA to submit. So there's been a lot of rumors on what you are required to submit. This tells you exactly what it needs to be. So documentation needs to be provided, such as payroll processor records, payroll tax filings, or Form 1099 miscellaneous, or income and expenses for sole proprietors. For borrowers that do not have such documentation, so if you don't have your documentation up to date. You can rely on bank records even. So they're making it easier. So all you got to do is have some payroll processor records. Right now, most banks are requesting the 941s, so quarterly 941s for 2019, and payroll tax filings, which are the 941s, and you should be good to go. So that's what you need to be pulling together. That's straight from the SBA, so there's no questions about what the lenders need to request from you. It doesn't say anything about tax returns. It doesn't say anything about P&Ls for businesses. It says specifically payroll tax documents and payroll tax filings. That's it. So hopefully that will simplify what you have to provide and also what the lenders need to receive and review before they present you with a loan. All right, so this was an interesting thing. So this piece of it, how do I calculate the maximum amount I can borrow? One thing I wanted to highlight is, we kind of talked through, all right, you take your average salary, multiply it by 2.5, that gives you your maximum amount. But step 5 is add the outstanding amount of an economic injury disaster loan, which is the EIDL, made between January 31st, 2020 and April 3rd, 2020. Okay. So you also have the ability to add part of the EIDL to your loan and have a portion of that forgiven as well. We talked about this a little bit on the call. If you don't remember, please go back and review that. But the interesting thing is it specifies certain dates, January 31st, 2020 through April 3rd, 2020. To my understanding and to my knowledge, very few, if any, people have received any loans through this date. So I'm wondering if they actually mean what you applied for versus when you actually got the loan or what. We're not sure yet. But that's the documentation that they have. And the other thing that says is basically not only can you apply for both loans, but you can also roll your EIDL into the Paycheck Protection Program and also potentially have a part of that forgiven as well. So pretty cool stuff. We will hear a lot more under that in the future. Okay, let's keep rolling. Is there anything that's expressly excluded from the definition of payroll costs? This is the drum roll, please, if you will. This is what everybody's been looking for. We'll start here. This is something interesting. It looks like a mistake by the SBA because the dates don't make sense. But basically, they're saying federal employment taxes imposed or withheld between February 15, 2020 and June 30th, 2020, including the employers and employees' share of FICA, Railroad Retirement Act taxes, and income taxes, which is interesting, but they're using the dates February 15, 2020 through June 30th, 2020, which has nothing to do with the calculation on how you get your average payroll. So I think this was a mistake by the SBA. I'm not sure what they were trying to do here, but hopefully we'll get some additional guidance out. But I did want to highlight that they are excluding some portions of it, taxes that you pay on behalf of your employees. However, the dates look a little wonky based on the calculation that you use in order to calculate the average payroll. So look for more guidance on that coming out. I know that the loans are supposed to come out tomorrow, or you're supposed to apply for the loans tomorrow on April 3rd. But listen, that may not happen. Okay, so bear with us. So here's the big one. Specifically from the SBA, this is the correct information. Do independent contractors count as employees for purposes of the PP loan calculation? No, they do not. Okay. This is factual information. There's no argument. They made it very black and white. No, they do not. They can go request their own loans, and you guys can have a conversation with how they request their own loans. Maybe you help them request their own loans and figure out some sort of deal. But that is an absolute no. they do not get considered. What is the interest rate? This has changed. They changed this literally today. The interest rate on the PPP loan went to 100 basis points or 1%. We talked about it being 0.5%. As of earlier today, it was 0.5%. They've increased it. Basically, and there's some, you can kind of read through this if you'd like to, but basically it gives more incentive for the lenders to lend because they can make a little bit more money off of it. That's the reason why. All right, can I use e-signatures or e-consents? So previously, it appeared that you actually had to physically sign all the documents, which really didn't make sense considering we have this 6 foot. Everybody's got to kind of stay away from each other system. And I apologize. It's pretty late here, so I'm a little exhausted and a little off right now. But basically, they are saying that they're going to accept e-signatures, which previously they didn't. Is the PPP first come, first served? Yes. Basically, they're saying when the funds run out, the funds run out. You need to be in there for the funds. So I highly recommend that you get your loan application in by the end of the day on April 3rd, which is tomorrow. Just another highlight here. They did not issue additional guidance on the loan forgiveness. They will do that going forward, but they just highlighted, hey, I just wanted to highlight, hey, we still don't have additional information on the loan forgiveness. That should be to come. So that will be coming down the pike. Again, I wanted to highlight this again because they put this in here twice, actually. I don't think they meant to. Again, these guys have been working hard trying to get this information out. They put it in there twice. I know they didn't mean to, but it does highlight how important it is that independent contractors do not qualify as employees. So that information is factual information at this point. What forms do I need and how do I submit the application? So I'm gonna read this verbatim. The applicant must submit SBA Form 2483, which is the application form, and payroll documentation as described above. So that is the 941s and 940s that we discussed on the webinar and also that I discussed above. That is all the lender needs based on what the SBA is requiring. All the lender has to do is submit the Form 2484 and they're good. And they just do that electronically through their system. Obviously, that has nothing to do with you as a borrower, but I just wanted to let you know it looks like it's going to be fairly simple to get this information to the right people. All right, and I just want to, and this is highlighted, this part is just highlighted to basically highlight the point that there's finite appropriations of this loan, and when it runs out, it runs out. Now, also it's highlighting that was put in place to be used for payroll costs and some overhead expenses. So if you take this loan out, and you'll see this later, they are going to not be appreciative in a nice way of putting it, not be appreciative of you using those loans for other things. I think somebody asked, well, what if I didn't want to bring my employees back and I just kept the loan and paid it off over 2 years? This document states that that's not a good idea, and they could and probably will come after you for that. And we'll go down to, I think, there we go, this section. What happens if the PPP loans are misused? I'm going to read this verbatim as well. If you use PPP funds for unauthorized purposes, SBA will direct you to repay those amounts. Okay, that doesn't sound too bad. If you knowingly use the funds for unauthorized purposes, you'll be subject to additional liability, such as charges for fraud. This is not a game you want to play with. If one of your shareholders, members, or partners uses PPP funds for unauthorized purposes, SBA will have recourse. So remember, in the webinar, we talked about it being a non-recourse loan. Now they're going to turn it into a recourse loan against the shareholder, member, or partner of the unauthorized use. Guys, let me make this very simple for you. It was designed to pay people, get people back to work, and to get businesses going again. Use the money for that. Simple. That's it. Go use the money for that. And if you don't have the ability to use the money for that, let somebody else use the money for that. Don't get yourself in a pickle by using this funds, knowingly use these funds and get fraud charges brought against you. Okay. It's not worth it. Use it the right way or don't use it. Okay. I'm going to be very blunt. Use it the right way or don't use it. It's not worth it. Thank you. All right. Let's go. Let's keep rolling. All right. Do I have some more? Yep. Okay. So there has been some questions, and there's still questions on whether or not, or what dates you can use. If you're a new business, you can use 1/1 of 2020 through, I believe it's 2/29 through 2020. Okay. But if you are an existing business, if you are in business before the year 2019, you, according to this, you use the preceding calendar year. There's also in this document, it also talks about using the preceding 12 months. So there's a little bit contradictory information. The actual application says the preceding calendar year. So I would recommend using that when you're doing your calculation for average payroll. Okay, so hopefully that makes sense to you. All right. Borrowers must submit such documentation as is necessary to establish eligibility, such as payroll processor records, payroll tax filings, or Form 1099 MISC, or income expenses from a sole proprietorship. That's just, again, third or fourth time you've seen in this document. All you have to do is establish the eligibility through some payroll processor records, okay? Some payroll tax filings, very, very simple, okay? Not a lot of difficult documentation you have to provide to your lenders to get this loan. Again, just wanted to hit again, the loan is now 1%, 100 basis points, not 0.5%. We talked about it being 0.5%. It's still a 2-year loan, but it's 1%, not 0.5%. And I think, let's see, I don't think I highlighted anything else. Okay, so that is everything. We are at 9:08 Central Standard Time. So I asked for a little grace. I know I kind of stumbled through this. It wasn't super clean, but guys, I appreciate this. I hope you get information. I hope you get value out of this. And ultimately, I hope you can take action and go get the money that you deserve for your business to sustain through this period of time in order to set up yourself to survive. You know, Jason talked about on the webinar that you got to build a fence around your mind, and your mind is probably the most critical part of your assets right now. You have to protect it and you have to use it to the best of your ability. You've had the last 10 years basically of a good run in the market. You've practiced for this. You've been tested. You've been challenged, and now it's time to rise to the challenge and get through this. We believe you can do it. We're going to be there for you to do it. And we want to be the guiding light to you being successful and be able to provide as much value as possible during this time. Guys, if you guys need us, Jason Medley, CEO of Collective Genius, one of the top masterminds in the country, truly an impressive organization. I'm Marcus Crigler, DuckettLadd CPAs and Advisors. We work with some of the top real estate investors in the country. If we can be of value to you, if we can be a servant to you, reach out to us, let us know what you need, and we can see how what we do can fit with what you need. And I'll leave it at that. Guys, have a great day. or have a great evening, I should say. Assuming this email goes out in the evening, it may go out in the morning because it is late. Otherwise, have a great day, and we look forward to seeing you very, very soon. Look for our emails. Make sure we are white labeled. Make sure we're not hitting spam. We want you to get this information. Thank you very much. Have a great day.